Hey guys, and welcome to Monday Stock Talk. Today is April 23rd at 4:05 p.m. Eastern Time. The market's just closed, and I wanted to get started because we do have quite a bit of tickers to go through because you guys requested them yesterday. So be on the lookout for that in this video. And now, if you guys do find these videos helpful, please hit the subscribe button. What's the benefit of doing that? Well, you guys can keep up to date with when I release those videos every day or during the weekends, or those content videos that help with your trading practices and strategies. You know, hone in as a community. We all go in as a group, learn together, improve together. So let's get started, right? Let's take a look at SPY on the 180-day chart. So here it is, SPY on the 180-day chart, and we said that currently we have been making lower highs, and you guys can see this, right? We're making lower highs, and that we identified that there was a resistance area around 271.36. Why is that the resistance area? Because this is the start of the SPY or the market breakdown during March 22nd. Because it started breaking down and started forming the downtrend, we would expect this place to act as a resistance, which it did on April 18th last week. It couldn't get over that resistance, and now we're on the trajectory going downward. Is that a surprise? I don't think anyone sees that as a major surprise. So we still held two possible scenarios yesterday. The more probable scenario we discussed was it just to continue the 3-day trend, right? We've been going on a downtrend, and the most probable is just continuing the trend, because a reversal, you guys can imagine, reversals or a major reversal doesn't happen that frequently, right? Let's take a look. Over the past like 3 months, right? Where's the reversal? 1 reversal, 2 reversal, 3, 4, 5, 6, 7, right? We can call it just 7 reversals in the past 4 months. So reversals aren't that common. Following the trend is more common, okay? Just looking in the big picture. We're not talking about spikes up and down, okay? Just big picture wise. So today's movement, looking at today's candle, right? We have a red candle to start. Now, recall yesterday we talked about 2 possible scenarios, right? One scenario was if we do push up over the 20 EMA, then we have a possibility of that's a really bullish sign for the markets, and we can even test this long-term resistance up here. And that'd be a good sign for the markets, obviously. But we said that the more probable scenario was just to follow the trend. Look at the first 4-hour candle, guys. It hit the 20 EMA, boom, gets rejected and got pulled all the way back down, and we closed at this candle. So at that point, you could have started shorting ETFs that follow the market. Well, why is that? It's because we're still on, this just confirmed. This is a confirmation that we're still in a downtrend today, right? Now, something interesting did happen. So we look at this candle. It's still forming right now because the market is still going. But look at this candle. We got pulled all the way down and got pulled all the way back up. And we're kind of even. These are the type of candles that we want to see if there's a possible reversal tomorrow. I mean, it doesn't have to reverse after it forms that candle, of course. But this is kind of what we want to see. I want to take you guys to the past. Okay, let's take a look at when we had a downtrend and then we got pulled up, right? So we got pulled up initially and then we had a downtrend. So let's see what kind of candles we're looking for. So here we go. We're going down. What kind of candle showed a reversal? Zoom in right here. Look at that. We have a major wick that goes to the bottom. Now there's another major wick, right? There's a huge tail that goes to the bottom and got pulled up. Here's another tail that got pulled to the bottom and got pulled up. That could be a sign that we are nearing the bottom. Does it always happen? No. Let's take a look at another. Let's see if we can find another one, guys. Let's take a look at like this one right here, right? We went up and then came down. What kind of candle did we make here? See this, guys? This longer tail, and we got pushed up. And this kind of started the uptrend. Today, we formed something similar. We have a very long tail. Here's another. Oh, this is more like an indecision candle, so we can't say anything about that. But this is a really long tail. That might be saying something, right? So here's what I added in. Yesterday we did Fibonacci on the uptrend, and we said that it could possibly pull down to 264 to 265. Did we hit this area today? We didn't. As you can see, I boxed in the area where I felt that we could possibly reverse. So there might still be some room for a downtrend. Like, it might still go down a little before it goes back up. But this candle is, in fact, a pretty positive sign for the markets. Now, there's a couple scenarios. Let's point out the scenarios that's possible tomorrow. The most possible scenario, in my opinion, is for it to come down to right here, somewhere here, before it starts reversing. Somewhere near that box, okay? Now, if we don't catch this box and like we just go swing straight past 263, then that's a really negative sign, and there probably has to be some sort of catalyst for that to occur. But if we do go down, which, I mean, it's possible, this is less possible, it could come down here before we do a reversal back up, right? Another scenario is this is the bottom today, we formed the bottom today, and we go up. That's a little harder to see. Yes, we did form this kind of candle, but usually we want to test this bottom. We want to see another candle that looks similar to this with a huge tail. Like, oh, we test this again, it gets pulled up. They're like, okay, that's a better confirmation that we have reached the bottom of this current downtrend. But we haven't really tested that yet, which is why these scenarios, we've got to be monitoring pre-market tomorrow, during the markets tomorrow, to see what actually happens and which scenario seems more probable at this point. But I am looking for a more bullish streak for the markets, at least in the longer term. I feel like it will start being a little more bullish. So those are the three possible scenarios. Let's take a look at TVIX, which is follows volatility. Here's something really interesting, guys. I want to show you this. Here's TVIX, right? We said that volatility would fluctuate between the support, which is $6.76, and the 20 EMA. And this has been exactly what has been happening. And I think I said this since this day right here, when we started like reversing back here. We're at the support. I was like, we should expect some volatility that goes up and down between the 20 EMA and the support. So that's what's happening. And yesterday I told you guys that, am I going to buy into volatility yesterday? No, there's no way. Why should I buy into volatility when we haven't crossed 20 EMA, we haven't seen a solid consolidation, we haven't even retested the support aside from this area? There's no point in buying volatility, and today you did see volatility pulled down. Now, what's so interesting? Well, for the most part, markets did end up in the negative, but volatility ended up even more negative at negative 2%, right? So what does that mean? That means the markets are favoring a more bullish outlook. Okay, and take a look at these candles formed today, right? We have a candle that pulled up to get rejected, that came down, and then we have another kind of indecision candle right here that formed even kind of near the 4-hour close. So take a look at this, right? We do expect volatility to fluctuate up and down, up and down. That's exactly what happened. All right. Am I going to go into TVIX now? I think you guys can answer that question. All right, so we have JP Morgan here, which is a major bank, and I like to look at bank stocks just to see what's going on between banks and the markets. So banks, in fact, did push a little lower, JP Morgan, which followed the market trend, and this is what we expect. But overall, I still feel that banks are still slightly more bullish. Yes, we did pull down, and we ended up down here, but I think that's just partially because the markets pulled it down. And this down streak down here coincides with SPY when actually, see, it lost its edge. What do I mean? So looking at SPY, this was the major support, right? You guys, this is the intraday support. So when you guys are playing the markets intraday, make sure you identify the support. And you, at this point, when it was going down and this support didn't hold, you could have started shorting. Shorting what? Shorting like TQQQ or UDOW or whatever, and let it go down. Now, how do you know that this is the bottom? So that's the major question, because we don't know that's the bottom. Because if you started shorting, and it starts going up, you're going to be nervous because you're like, oh my gosh, market's going to recover. So yeah, so this is harder to identify, but you should be able to identify that this was the major support intraday. Okay, so let me just take off some of these lines. Oh, I just realized I drew in all these lines earlier, right? And during the video talking about potential trends. Okay. So there you go. And this is the more probable trend that I see, at least currently. So now let's talk about /CL, which tracks crude oil futures. Okay. Wow, oh wow. Right. I have maintained the stance that crude oil futures are bullish for the past week. At least the past week, right? It's been bullish. At least I've told you guys that do not go into drip. So we'll talk about drip in a moment. But crude oil, we identified, so looking at the 180-day chart, here's 180 days. Crude oil has been making higher highs and higher lows. And that, I'm going to remove this one, and that we identified a support. Where's the support, guys? I think I just deleted this, but this is the support, around 67, 69. Why is that the support? Because before this peak occurred, this was the previous high. This was the 180-day resistance over here. So if we beat this resistance and we keep over it, we call this the new support. Let's zoom in on what happened today. We came down to the support, but we had a green candle engulfing the red candle. And if you guys know candlestick patterns, that means that's a possible reversal. This big engulfing at the support area, and crude oil did push up. Now, why should we be a little careful? Well, the first thing is we see that the resistance is at 69.55, right up here. We're getting really close. So keep that in mind. I'm still bullish for crude oil, for sure, especially right now. But we got to be careful if you're in a position. So let's take a look at GUSH, which follows crude oil. So if /CL is going up, GUSH is moving higher, right? The first trend we want to look out for GUSH is because GUSH has been going up so much, we look at the 3-year chart. The 3-year chart has been pointing a resistance line that's making lower highs, okay? Which is why we had a hard time pulling above $32. And you can see right now, we're still having a slightly hard time getting over 30, closing over $32. Yeah, that's what I mean in terms of getting over $32. If we can close over $32, then that's a positive sign. We have not been able to do this. So this is still acting as the major resistance, right? Looking at the 180-day chart, we also said that this was a resistance, this horizontal line, because this is the start of crude oil breaking down and dropping the bullish pattern. This is why this is the current resistance, and you can see that these two lines coincide with each other so that you can in fact verify that this is in fact a very strong resistance. So right now for crude oil, here's another reason to be cautious. Look at this. What is that, guys? When you make something like at the peak, that's a double top, right? Double peak. What are we doing right now? We're beginning the double peak. Okay? So I wouldn't be surprised if it does hit somewhere around here tomorrow. But then I wouldn't be surprised if it came down. I'm still bullish for crude oil because I still think that crude oil has a potential to break this resistance area. Now I'll tell you why. Now we look at drip. So as GUSH is moving up, drip is going down. Drip is inverse crude oil, bearish oil gas ETF, okay? We talked about this last time by looking at drip's 1-year chart. We said that every time drip has fallen below a major support, it keeps falling, right? And I made these boxes for you guys. Fell below a major support, it keeps falling. Major support, keeps falling. Here's the horizontal line showing the major support, and we fell. So let's zoom in on this portion. And what is happening right now? Yes, we are seeing a little bit of consolidation, but we can easily argue that this is not a reversal sign. This is not a bullish sign. What is that doing? It's literally trying to get back to the 20 EMA, and at that time it has the potential to come down again. So there is no reversal, and for people who are in drip, it's just, I don't know. It's like that strategy is so risky. Like the odds, in my opinion, are not with you if you're in drip. So again, I'm looking for drip to continue its downward trend just based off of previous technical analysis. And because drip is going to go down, in my opinion, then crude oil has the potential to go above its resistance. Okay, it's 3-year resistance. So this is what I'm looking for, at least in the near term. So we'll see what happens in the next few days. Let's talk about, so I'm not going to go into GUSH or drip, right, guys? I'm going to wait until GUSH pulls above the resistance before buying in. Am I going to go into drip? No, not for a while. So let's talk about natural gas. Natural gas follows /NG. Okay. Looking at the 180-day chart, we left off yesterday saying that natural gas tried to hit the peak, right? And we said that this might be a time to get into DGAZ. But I also told you guys this, right? Do you guys remember from yesterday's video? Look at the double peak. It usually does a double peak before it comes down. Double peak before it comes down. Okay, one peak. Okay, this might not be the double peak yet. This is still, might be still in formation. This might be the double peak, but it's trying to form a double peak right now. Okay, wait for the confirmation before going into the ETF. So as natural gas, if natural gas does go down, we want to go into the ETF called DGAZ, because DGAZ is inverse natural gas. So DGAZ is, I know some people kind of jump the gun. They even, kind of talk to me today in terms of buying into DGAZ. And this is why I don't like to jump the gun right now, right? We said that it usually does a double peak for natural gas. It hasn't really formed the second peak. It's a, we're like in the middle, you can argue. So taking a look at this is DGAZ. You guys might be like, oh, well, it's time to buy at the support, right? This is a great strategy. Buy at the support. But you got to be cautious, because here's what I want to look for. Looking at previous trends, what happens at the support that kind of confirms that this is a support? A long tail. A long tail. A long tail. Tail. Do we have a tail today at the last 4-hour candle? No, we have not. We don't have a tail yet. So what does that mean? That means that as long as we don't see, so we need it for it to push down. Okay, we need natural gas to plummet, like to go up. DGAZ to push down, and then if DX can push all the way back up from its bottom, then in fact we can say that, okay, we have reconfirmed the support. And you guys can see that at this area, we had to reconfirm the support a couple of times with these long tails. Here, we reconfirmed it once, but regardless, we want to see some tails. So you guys can buy in right now. It's again a little more risky for me, because this kind of pattern shows that we might still continue downwards. Okay, so tomorrow during the first 4 hours of pre-market, if I do in fact see it pull down and then push back up, that might be one confirmation that I'm looking at to get into DGAZ. So you guys, if you guys entered at $27.21 today, right, you might be, be in an okay position maybe if you set your stop loss. But think about this. What happens tomorrow if it fell to $26.50? And then I enter the position if it pulled back up back at $27.21. Would I feel better about my position during then? Or would you feel better about your position right now? We both bought in at the same price, but I think I would feel a little better based off of my position because at least I have one confirmation of the support. So yeah, this is what I'm looking for in natural gas. Now moving on to /GC, which follows gold futures. So gold futures, and I know some of you guys, a lot of you guys on my last video kind of commented and even messaged me later in terms of saying gold is on the downtrend and therefore I'm in JDST. Okay, you guys did a great job, right? We had gold break this. Well, yesterday we already saw that it broke this uptrend and gold has been coming down. So I was looking for, I'm currently still looking for some sort of bounce at the support line. Gold is at 1327, okay? I'm still looking for some sort of bounce. Right now, is this a bounce? No way. If it doesn't bounce here, I'm gonna look for this bounce, right? This is like the 3-month support down here at 1312. So right now, I think if you're in JDST, you're in an okay position because gold is not showing any signs of a reversal just yet. One thing to keep in mind though is because we are far stretched over the 20 EMA, right? The light blue line, we might start seeing some fluctuations back and forth. Now, if you're willing to take the ride of losing some percentages, gaining some percentages, losing, then by all means, go ahead and take the ride because it might keep going down. What do I mean by that, right? Look, when we get really out of the 20 EMA, when we're really like far away from the 20 EMA, we get some fluctuations. Look, we're really far away from the 28 over here, right? We get some fluctuations trying to get back to the 20 EMA. Gold will do some sort of recovery, whether it's sideways recovery, okay, sideways consolidation, but it's a little less likely for it to just to keep going down. I mean, of course, it could happen, just like all the way plummet, but we still do need to see some tails or heads that get to the 20 EMA and then push back for it to kind of confirm that gold is still going down. So I'm looking for a gold reversal. The gold reversal is not there yet. Am I going to enter a position JNUG, which follows gold? Of course not. So let's talk about JDST, which is inverse gold, which is what you guys are mostly in, I think. And taking a look at JDST, we saw a very nice bounce off of the support level, right? This is the support level, and let's just make this a little lower. We saw a very nice bounce down here, right? And then now we're nearing the resistance level. So for people who are in JDST, once again, just be a little cautious as to watching the gold futures as well as this resistance line, which we may hit tomorrow around $51.90. That's just something to look forward to. Doesn't mean it will have to hit it. Sometimes it might not hit it, like right here, and starts coming down. So that's just something, in my opinion, if you're in JDST, I would start covering your profits. Like you guys have already made 6% today. If you were, if you entered yesterday, you made 6% today. That's a lot of profit. Start taking a little bit out. If it does start breaking this resistance consistently, you always have the opportunity to buy back in. But money is power. You don't have money, you don't have any power, and that's it, right? So that's for JDST. You guys know that I'm looking for a JNUG position because JDST is climbing to the overbought situation. So here's JNUG. We know that JNUG has a support down here. I am going to see if it does catch these two EMA lines, right? The 200 SMA and the 150 SMA. I wonder if it will catch this area and start kind of bouncing there. But this is a to be determined scenario. Because it's falling so hard, we'll just have to wait. I am waiting. This is a wait and see kind of scenario. Now, let's start talking about tickers. Square, SQ, this is the one that I'm in, and this is the one that I feel most comfortable in. So we talked about Square gapping up in the previous days. Every time it gapped up, it was like a confirmation that it was going to go on an uptrend. Here was another gap up. So what does the gap up mean? It gaps up over the 20 EMA line which in its open was higher than the close of the previous day, okay? And the close was higher than the close of the previous day. That's gapping up. So we gapped up here over the 20 EMA. Gapped up here over the 20 EMA. We actually gapped up here over the 20 EMA. Unfortunately, the markets did kind of do the volatility thing and pulled Square a little bit down. I find this a very good buying opportunity for a stock like Square. So I might start putting in a couple more shares into Square in maybe tomorrow or the next few days, because look at where we're at right now. We are at the 20 EMA. Looking at the past trends for Square, if we hit the 20 EMA, this is once again a great buying opportunity because it started going up. Now it did come down, but look, when we gapped up again, we hit the 20 EMA and started going up again, right? Hit the 20 EMA, we started going up again. Here we hit the 20 EMA, right? You get the gist, right? So I think Square is still a pretty good buying opportunity. One thing to keep in mind is I like long-term investing and short-term and like day trades, but long-term investing, in my opinion, pulls me more consistent profits. Short-term day trades, if you're a full-time trader, then by all means, I think you can do day trades. But so if you guys have the time to do that and analyze all those trends and do your homework, then by all means. But I like longer-term, preferably because these trends are pretty set. You know that you can get a profit off of the stock that you choose. So, all right, let's talk about the stocks that you guys called out, starting with NTNX. Okay, so NTNX has shown an uptrend, right? You guys can see this uptrend. I like this sort of pattern. It's just right now, this is a little more concerning to me today, right? What happened? We had two red candles going under the 20 EMA. We saw a potential push up today over the 20 EMA, only for it to come down. In the next 4-hour candle, we couldn't even hit the 20 EMA, and then we got rejected. That's a little dangerous in terms of the design, like the pattern design. So what am I looking for? Well, for this, we might be seeing something like this, kind of this trajectory. We might see a smaller correction before it starts going back up. It might, go back up tomorrow, but right now you guys can see that we've done a small U-turn. So this is something I would wait and see. So I want to set. This is a good one to call out. I'll set my alert once it goes below 48.17. Why this area? Well, because this is the support, right? You guys know that this is the support. Whether it gets down here or it doesn't really matter, because I'll probably buy in. I'll look into buying in if I can see some double test of the support. At that point, I'll consider buying into NTNX. Good call out. Just right now, I would be a little cautious. Next one, BGFV. So I think this is a sporting goods company. Ah, yes. This pattern. Okay, very interesting pattern. Let's take a look at the 1-year trend. Okay. All right. Let's look at the 3-year trend. Ah, okay. So yeah, I like this potential certainly. Taking a look at this, right? If we looked at this pattern, it did go up very quickly, and we're trying to mimic this pattern right now. So a couple things just to keep in mind is, regardless of what happened in the past for this stock, we're overextended over the 20 EMA, okay? I like the pattern of this, but look at this volume. Look at the 1 day. I like the pattern, it's just the volume isn't there. And as you can see, the volume has been decreasing, right? Today it actually spiked up a little more, but the volume generally has been decreasing. So this is just something to be cautious. We're overextended over the 20 EMA. We've had a streak of days. How many days was this? Oh my goodness. This was 12 days of just almost continued upward movement. What happened to SPY when it went up 7 days, right? It went back down. So chances are, I look at this. It retests the blue line. What's the blue line, guys? 50 SMA. 50 SMA. Didn't even hit the 50 SMA. 20 EMA. At the very least, I expect to come down to 20 EMA. If I see a bounce, like something like this off the 20 EMA, definitely, I would go into this stock. But if if it doesn't bounce, I'm looking for potential buying opportunity at 50 SMA. Right? I wouldn't buy in now. It's too overextended. And what happens if it starts? Right? I don't know if it will, but if it comes down, are you guys willing to lose 3% just to see how it plays out? I don't think so, especially given the small volume. But good call out. So I put an alert here today at like $7.80 because it went up a little more today. I'm going to put another alert at $8.25. So market at or below this area. Good call out. Next one, Apple. Okay, this one is one that a lot of people wanted to see because Apple, we know, is a massive company, right? And we expect it to bounce at some point, right? So Apple, I think some news came out about like iPhone sales going down and whatnot. So there were some news catalysts that moved it down. Okay, so we know that the support is $165, around $165. This is exactly where we're at. But let's take a look at past trends, right? You can see that when it does come down, right, it can even come down even lower. So it doesn't mean that it has to stop right here. And as a matter of fact, I think some people like kind of downgraded Apple as well in the past few days. Like they sold a lot of their shares because they saw this pattern forming. This is something I would not go into right now at this point. Will Apple ever get back to 183.50? Certainly. I feel like it will go back sometime in the next 6 months, for sure. I mean, it might be in the next 2 months. Who knows, right? Next month. But is this the best buying area? Not yet. So why is that? It's because I do want to see some sort of consolidation at this area before I potentially buy in. And you guys can see when it did this downturn, right? It consolidated. And even when it got pushed up, it got rejected by the 50 SMA. Rejected by the 50 SMA. Pushed over the 50 SMA. Then what happened? 50 SMA acted as a support. So at the very least, I want to see some tests down here. But for now, look at Apple earnings are coming up. Okay, regardless if the stock is already priced in, like, oh, it's already oversold. Like, why take the chance? Because earnings are coming up and we're at this low point, right? I don't think there's any reason to take the chance. This is a watch and see kind of scenario. So I will set an alert. Like if it starts dipping below 163.28, I want to take a look because that could be a potential short sell activity. And then once it starts kind of fluctuating over 168.38, that will tell me that we are potentially retesting the 20 EMA at the very least. So not something I would go in right now, but something to watch and see. Okay. Next one I want to talk about is Macy's. So I think one of you guys asked me, is Macy's a good buy right now? And if it's a good buy, do you think it'll cross $31? So, right, we see that Macy's has a 180-day resistance, very strong resistance because of the previous high, at around $30.90, right? We're at the resistance. Why take the risk at the resistance, right? So, taking a look at this trend, right? Here was the previous high, previous resistance. Think to yourself, if you bought in at any one of these points, up here, you would have gotten fooled, right? Why would you have gotten fooled? Even when it did cross the resistance, it even came down. Okay, then it would have been back up. So even if it crosses the resistance, it has the potential to come down. So is this the perfect, not perfect, but like, is this a good risk to reward opportunity? No, especially at this point. where could I consider buying into Macy's? At the very least, I need it to see retest the 200 SMA. Gets down to the 200 SMA, bounces up. 200 SMA, bounces up. Even if it crosses over, I'm not going to buy into it just because of previous trends. It's tricked people in the past. I'm not going to be the person who's going to be tricked. And so hopefully you won't be the person who's getting tricked. If, of course it can go up, but the potential for it to go even higher and stay higher is a little lower based off of previous trends, right? So I'm looking for it to come down to possibly around 28.67. Create an alert down here. So if it does come down, what's the potential profit? Because this line is going to continually etch up as the stock is above the 200 SMA. So, the potential for profit, 6%. Potential for loss, if you do set it around 3%. It's an okay, but I feel like you can find better ones. All right. I think that's everything I'm looking at today. So, thank you, everyone, for watching these videos. Remember, there are content videos that were posted yesterday, one video, and it's going to be a series of videos talking about my trading strategies that expands more on what I look at here during my daily stock talks, as well as other strategies that I've learned in the past. Also, there's also a trading course that is currently in development. I'm developing the course, and it's a very easy step-by-step how to identify patterns, how to generate that profit, and how to manage your risk, which is really important because not everyone will make money every day. That's just for a fact. Some people, how do you control your losses? What happens when that, what do you do? Thank you for watching. Like if you like this video. If you didn't like it, I hope you like it in the future. Subscribe to the channel. Keep up to date to my videos, and I will see you tomorrow, Tuesday, for another one. I think this is a really long video, but keep those tickers coming, and I'll help you guys analyze it. See you tomorrow.